Is our 72nd paper, and today's title is Presenting Car Talk. As you can see, it's March 28th. And there's not as much content to go through today. Personally, I think we're just going to look at a couple partnerships, some potential acquisitions going on in the space, and then a few patents, along with the regularly scheduled programming. So again, let's just get into it real quick. And again, disclaimer, all information here is for educational purposes only. This is not intended to be financial advice. I'm not a financial advisor. Consult a financial advisor if you want to make investments in this space. Do not consult my videos on Twitch or YouTube, and any suggestions or advice or opinions that I put forth that are intended to be my own and my own only. Anyways, going forward, again, if you guys want to subscribe to our newsletter, check out our website, thedailybit.news. There is a sign-up button right as you log on to the site. Just throw in your email. We don't send your email to anybody else, so don't have to worry about getting that scraped and getting additional advertisements sent your way from that. But again, if you want to subscribe Monday through Friday, right and early in the morning, just the latest news, anything that's really relevant for you that you might want to know to help you keep up to date with crypto and blockchain. So again, for our table of contents, same stuff as usual. We're going to start off with our tweet of the day and then get into the standard stories. For word on the street, we have digital assets hitting retail outlets. Here we're going to just look at several partnerships that have came to light and kind of explain how getting cryptocurrencies in retail stores, even though it's pretty self-explanatory, how that fuels adoption and how that helps, I guess, improve the attention, get more eyeballs on cryptocurrencies, and help improve adoption that way. For the second story on Word of the Street, we're looking at blockchain startups and corporations. They're partnering up. There's a couple deals or partnerships that came together and were announced in the past couple of days, so we're just going to run through those. For Where's Blockchain, we're looking at Ford and a patent that they released that has to do with adaptive cruise control. This is a pretty interesting patent. By the looks of it, they're basically trying to use a vehicle-to-vehicle transaction system where you can transfer a exchange between cars that helps with traffic flow and reduce congestion on the highway and also in any other traffic areas. So we'll get into that. For Bulls and Bears, Circle is expanding its circumference, and we're going to look at what they've been doing in the space. Two things recently came in with Circle, and a ringleader of a cybercrime syndicate was recently busted. We're going to look at what they did, how they were able to accumulate so much Bitcoin in using malware, and we're going to wrap up with education on Nvidia, the cryptocurrency the GPU creator for cryptos, and also gamers and what's going on with them, and also who owns the most shares of Nvidia. So, going on with the tweet of the day. This is coming from Morgan Housel, and Morgan goes, "My favorite business quote is when someone asked the CEO of Charles Shaw how he could sell wine for less than the price of bottled water. And they go, they're overcharging for the water, don't you get it?" And when you think about this, this one really resonated with me, because when you really think of business strategy, a lot of it goes unnoticed. And the idea here is that people are obviously focused on the wine because they think the wine is the kind of sell item here, but what makes the scheme work is the fact that you overprice for water, so you make people think that wine is going to be more valuable at the end of the day. So again, just like a different, it's all about perspective here and how you kind of think about either psychology with selling or your buyer or kind of what's on the market. So again, this is kind of something interesting that I didn't necessarily think about in the same way that Morgan outlines here, but again, just something cool that I came across. For word on the street. So again, cryptocurrencies, when they're getting adopted, a lot of people kind of, like seeing is believing, and seeing cryptocurrencies in physical retail stores and online e-commerce shops, that's going to convince a lot of people that there's actually value for digital currencies. Until then, it's definitely a lot more speculative because there's no proof that we necessarily need these or people are actually using them for payments. So again, the way I look at this, eyeballs brings attention, and then once you have attention on a product, then you have awareness of the product being there, and that awareness usually will lead to conversation surrounding that product, and ultimately somebody's going to be the first one to break the ice. Someone's going to invest in the product, and ultimately with enough investment, then there would actually be adoption down the road. There could be different steps involved in there, but again, just like as a general outline, in order to get to adoption, you have to start with people looking at the product and seeing the product, and that's going to drive more investments in that aren't already in the space and involved in the space. Here I'm talking about new retail investors, new corporate investors, but just in general, anybody that wasn't already exposed to cryptocurrencies, you need to get eyeballs on it. And one of the best ways to do that is through partnerships that ultimately lead to cryptocurrencies getting adopted into more retail stores and e-commerce platforms. So again, just looking at two partnerships that are recent. This is, the first one specifically is catered to South Korean markets with Bithump, a cryptocurrency exchange, and South Korea Pay. I believe they're once again a platform service where you can accept cryptocurrencies. And basically the idea here is that 200 franchise brands in South Korea are going to accept cryptos through Bithump and this collaboration with Pay at 6,000 retail outlets, ideally by, well, they're targeting the end of the second quarter for 2018. So by then the idea would be to have 6,000 retail outlets accepting, or at least letting customers pay with cryptocurrencies, whether they want to or not. That's really the kicker, to see if there's actually going to be a conversion once it's offered and on the table. And then by the end of 2018, there would be about 8,000 retail shops there. But again, South Korea has always been huge with cryptocurrencies and adoption, so the fact that there's another 6,000 to 8,000 outlets that are going to, I guess, be on the table for these payments to actually be made use of, then that's only going to reinforce the belief that there is use for these digital assets, and it's not solely intended to send people on a roller coaster and make these fantastic gains and incur these fantastic losses in the market. And the second one is partnership between CoinGate. They're, again, a payment platform where you can actually use cryptocurrencies for payment. You can accept payment in cryptocurrencies. There's about 50 different digital assets of alternate currencies, and then 3 or 4 of the main cryptocurrencies that CoinGate facilitates transactions with. And this is a partnership with Prestashop. They're a mobile solution where if you have to build a website or an e-commerce platform, then Prestashop lets you do that. And they have a network of 250,000 shops worldwide. There's only 80,000 being integrated here with CoinGate. But again, they also, along with breaking the international borders, they're breaking language borders too. Or at least the idea here is that cryptocurrency conversation would seep into up to 60 different languages, because that's how many languages are used on these platforms. So again, there is a lot of opportunity for, I guess, adoption here for each of these partnerships. So we'll see how that goes. But in order to drive that, especially with advertisements kind of falling off the map, you're going to have a lot of these retail stores step up and say, I'm willing to take the risk of facilitating transactions with something that's super volatile like cryptocurrencies, because I believe that it's necessary, there's actual value there, and it's going to be used down the road. So again, that's that here. And also, this is CoinGate's platform. This is just pulled right from their website. You can see that they do accept Bitcoin, Ethereum, Litecoin, Dash, and then a plethora of other alternate currencies. So again, it's catering to the masses here. You don't necessarily have to hold one of these 4 cryptos here. You can hold any different type of currency, and then you can pay for it there. So again, if you have a bag of Omnisego, for example, then you can pay with Omnisego if Prestashop's platform is within one of those 80,000. So again, it's a huge expansion, I personally think. So we'll see how that goes. And again, just more adoption for, I guess, in the broader market in that sense. Moving forward, there are a lot of blockchain startups. There are a lot of blockchain startups and corporations that are partnering up, and I see this as basically these institutional investors and institutional corporations are slowly getting the hang of things. They're understanding what's going on in the space. They're understanding what brings value to what cryptocurrencies are potentially bringing value to them, where they need blockchain solutions, and how they can kind of go about venturing into the space. And like we saw yesterday with the Request Network partnering with PwC France. PwC France looked at Request and their auditing and other accounting tools that they use, and also along with many other options too, with their invoice and their payment systems. They saw that vertical as a good use of a partnership. So that's where the Request Network partnership came from. But again, that's not necessarily for every single corporation. There could be other blockchain startups that are appropriate. So again, just looking through 4 recent platforms and projects and kind of what they're getting involved in. Coinbase could possibly be in discussions to acquire Earn.com. Coinbase hasn't commented on the acquisition or potential acquisition, but there are 2 sources that are close to the deal that said, well, one of them said that a sale price could be around ballpark $30 million, and the other source said that when you take into consideration the cash, the stock, everything that's going to bring value to this deal, it could be as valuable as it could be upwards of 120 million. So again, this range is pretty massive. I wouldn't necessarily rely on this too much, but again, this kind of gives you an idea of what could be going on with Coinbase. And then here, the bigger picture is, what are they going to use Earn.com for? If Earn.com is going to be used, again, I am not as familiar, but I'm expecting that you're going to either use this in conjunction with some sort of payment provider. So if Coinbase were to acquire Earn, then I would expect that they would be able to integrate their Coinbase Commerce tool on the platform and then have that entire audience exposed to Coinbase's services, and from there start implementing more cryptocurrency payment options for all of those merchants and all of those retailers. So again, we'll see what happens there, whether or not it actually comes to light. I think there are other competitors in the space that are also said to be in talks with Earn, so Coinbase may not be the only one that's trying to get a hold of Earn.com for an acquisition. Next, for Spring Labs, they just received $14.75 million in a seed funding round, and it was led by August Capital. But essentially here, the seed funding is going to be used to grow their blockchain platform and grow out their core development team to help them, again, just have the best and the brightest people on their team and making sure that they're able to innovate appropriately and make sure that they kind of don't fall behind the rest of the pack with innovation here. Next, for MedCredits, they partnered with Civic, which is a secure identity platform. MedCredits is within the healthcare industry. They're trying to innovate with making sure that patient information is secure on a blockchain. And here with Civic, the idea is essentially that a public registry of physician information could be created that's decentralized. So again, each physician would have, I guess, a public address where that's encrypted with public key cryptography. But again, if somebody wanted to contact a physician, they would ideally be able to send them information through this public registry, contact physicians through there, and this would help facilitate the dispersal of information in the healthcare system and promote interconnectivity of all these physicians and all of these, I guess, medical patients. Right now, the fact that there's centralized hubs of medical information makes it really difficult to get that information across the space and transferred to people in a quick, efficient, cheap manner and secure manner too. So again, this seems like a sensible partnership. There's also other groups. I believe the Key, they partnered with, I want to say, it might be a city in Taipei, but again, the Key is working with Asian markets to kind of look into similar things with healthcare. But expect, again, with healthcare, making sure patient data is confidential and finding an identity platform in a blockchain startup that is able to make that happen. So again, expect more of this in the future as these pilots are launched. And Komodo, they just partnered with ValueNet. Komodo is working with decentralized ICOs in their platform where each project that launches on Komodo is able to run on their own blockchain, which is pretty unique. And then they're also very, very innovative with atomic swaps. Komodo, I believe, has I think up to 95% of all alternate coins, and then don't quote me, maybe it might be ERC20 tokens, but Komodo is very, very far ahead of the pack in terms of platforms that are able to make atomic swaps compatible on their platform for other coins. And again, there the idea is that you could transfer, let's say you had Neo and Ethereum, you'd be able to transfer or create an exchange for Neo for some Neo and Ethereum just from their wallet. So you would be able to transfer Neo from your wallet to somebody on the other end and basically just like have transactions from one wallet to another. That was a lot more long-winded than it had to be, but again, just making sure atomic swaps are possible through Komodo. And ValueNet, they're going to be providing risk assessment and strategic consulting services for these ICOs as they get launched on the platform. Komodo is going to make sure that everything goes according to plan. So again, just finding where there's going to be synergies with these projects and understanding which ones are at the head of the pack could help you kind of understand like what kind of partnerships we could be seeing down the road with all these companies. Moving forward for where's blockchain, Ford is looking at a pretty interesting patent and a technology that has to do with vehicle-to-vehicle cooperation to marshal traffic. And the idea here, or at least the way that I'm looking at it, is that they're creating. So you have your autonomous vehicles, but on top of that, they're looking into a patented technology that would basically set up a line of communication between all the vehicles on the highway. So if you're on the road and you're trying to merge into, or like there was an accident on the side of the road, and people love to rubberneck, and I don't know, whatever it is, whether it's definitely psychological. People want to slow down, and they see all these other cars slowing down, so they want to take a look at the accident and see what's going on. And that obviously causes more congestion around the accident. So the idea here is that a traffic cataract, such as an accident or whether it be an intersection, anything, is identified, and then all the cars in that area would kind of buddy up, form a platoon, and then interact with each other through this system where they would navigate all of the vehicles through that platoon or through that cataract at a set speed, organizing who goes first, who goes last, and basically just creating an assembly line through that cataract. So again, it's taking away all human emotions out of driving, which, I mean, it's basically a beehive of command, and the fact that they're all working and moving as one unit is something that just seems very, very, very high tech, in the sense that humans are basically out of the equation again. So I think that's super interesting. And again, looking at how they're going to make this happen, there's what Ford calls a cooperatively managed merge and pass system. So basically here, CMMP tokens would be used to facilitate, or I guess like validate and authorize transactions. So the idea here would be, if you are trying to get in the lane over and there's like a Honda Civic or something like that driving, but you're a consumer vehicle in a less occupied lane, you're driving faster because obviously you're not getting off for an exit or something like a merchant vehicle. If you wanted to switch lanes and kind of head out, there would be a transaction that's sent across the network with these CMMP tokens that basically, once confirmed, the cars would work together to create space within that more congested traffic lane for this car to kind of merge in there and switch gears. So again, it's taking away any spontaneous moving from one lane to the other, and really just facilitating these transactions that are completely decentralized, completely automated, based off of whether or not a transaction is confirmed. And the sense here is that it would really decrease the amount of risk of driving on the road, knowing that all these systems and all these basically exchanges between lanes is already confirmed on the blockchain, and everything is already going according to what's listed on the blockchain. So there's really nothing left up to chance here, which could be huge for safety, could be huge for self-driving cars in the future. So we'll see how that goes again as that kind of gets tested further. All right, what else you should read today? Again, Polymath is a security token platform. They're trying to launch security tokens. Somebody here discussed the advantages of security tokens, why you're going to see more of those. So again, if you want to take a look at that, feel free. The Enterprise Ethereum Alliance, which is a group of companies that are exploring the uses of blockchain technology. Since there's not really a best practice right now, companies are kind of learning on the fly. Forming these alliances and then collaboratively studying the technology has been an approach that a lot of companies are looking into. So again, more companies joined on there, just to show that there's definitely a greater interest in the tech. A research institute under China's central bank launched a blockchain to develop property rights on the blockchain. So again, this is really looking into personal identity, making sure that identities are secure on the blockchain, and this is potentially going to disrupt China's entire government, in the sense that it basically, when you consider how data is stored in their government databases. So putting everything, again, transferring everything onto the blockchain, making sure that it's secure, making sure that it can't be hacked by with malware or anything like that, making sure that it's encrypted with public key cryptography. So again, China is starting to make moves here with a blockchain that they control. They banned Bitcoin and other public blockchains because there's no control retained by the Chinese government. The fact that they're rolling out a blockchain that is under their control shows that that China understands the value of distributed ledger technology, but they need to make sure that it's under their command, under their domain, and basically they can monetize it and make sure that it's all, again, under their system. Two major central banks, one of them specifically the European Economic Commission, I believe, and the Bank of Japan, they released a big report on distributed ledger tech and how they could use that for securities and their settlement systems. And then basically this is talking about how securities are starting to be issued with these ICOs on these blockchain platforms because it's more convenient than an IPO. It could lead to more liquidity on these platforms. It introduces these tokens to a 24-hour global market. There's instantaneous conversions of ownership from one party to another. It's immutable. It's on a public ledger. There's much more transparency using these systems. So again, it's a rather extensive report, but could be a good educational, I guess, read for anybody that wants to go either skim an actual research report that's more professional or just kind of flip through that. Bitfinex, in light of President Trump's ban, isn't going to be supporting the Petro. I think this makes sense. I mean, the last thing you want to do is kind of openly accept the Petro if you're one of these larger platforms. You don't want to have beef with the United States or any other country that is kind of against the Petro here. So again, I bet this is going to be standard for at least the platforms that have customers that trade in the United States, or any platforms that are based in countries that are in cahoots with the U.S. I just don't think that many are going to accept the Petro, so that's going to definitely dampen its liquidity and probably decrease its viability as a digital currency. And again, if you want to see how Bitcoin could bring back trustless money, in the sense that you don't necessarily need to rely upon a central government or another governing body to use their currency, take a look at that article, that final one. It's another opinion article about why this could be and why Bitcoin, just lists a bunch of reasons about why Bitcoin is bringing back potentially this trustless system. All right, now on to bulls and bears. Circle has been killing it recently. They just acquired Poloniex Exchange, and Goldman Sachs obviously has a piece of Circle in their investment portfolio. So again, this is all kind of being planned out by all these companies, and they're kind of looking forward. And Poloniex Exchange is going to be getting a lot of help and has been getting a lot of help from Circle's board, from Goldman's advisors and strategists. And again, Circle's been making moves. They launched their investment application for the United States, which is currently released in 46 countries. That's going to compete with Coinbase. That's going to compete with Abra. That's going to compete with Square. All these other companies that are offering cryptocurrency payments. And then they also they're intending on expanding Poloniex into the Asian markets and hiring 100 people there. But more recently, Circle hired Naheem Ishaq, who's going to be their CFO, treasurer, and executive vice president of risk. And Ishaq brings some decent, well, I'd say pretty respectable, I guess, experience with him. Previously, he worked at Box with e-commerce, where he was managing a bunch of different revenue streams there. So again, this is going to help him kind of be a person of many hats over at Circle. And then on top of that, he's coming from Square, which is a direct competitor. So he worked with the risk assessment systems over at Square. So again, kind of having that under his belt is going to definitely help as Circle tries to make sure that they're compliant with any regulatory policies that they come across, and just making sure that their systems are kind of down pat and in compliance with all these regulations. And after that, on top of that, Poloniex was added to TradingView's trading portal. And again, for anybody that's unfamiliar with charting and basically charting, there's really two modes of thought, or two platforms that are very popular. One of them is Coinigy, and the other is TradingView. And I've never used Coinigy. I've always used TradingView. When I'm charting, which again hasn't been recent in recent days. But again, the idea here is that the API for Coinbase, or you can connect your, you can hook up an API to your Poloniex account through TradingView. So again, if you don't want to go on and use PolonieX's interface, you can chart your coins on TradingView, connect your Poloniex account, and then you can execute buy and sell orders directly through TradingView. And the fact that it's the only cryptocurrency broker around here. It's along with Forex, Alanda, CQG, and Paper Trading, which is, I guess, TradingView's in-house platform. But the idea here is that there's a lot of people that may just prefer TradingView so much that they don't want to log on to Poloniex, they don't want to log on to Bittrex, they don't want to use the in-house trading materials and charts that are offered at these other platforms. So the fact that TradingView it's super user-friendly. There are so many tools that you can use for charting. They have a very diverse, I guess, time frame on there. You can chart you can put on monthly bar charts, weekly, daily, 4-hour, 2-hour, 3-hour, 1 hour. Again, there's a lot of options on there, and it's less laggy personally from what I've found, and just a better experience overall than some of these platforms. So again, it's all about the eyeballs. If more people, I could see how more people would want to use TradingView and Poloniex and execute trades just straight from the platform. So again, this is a huge plus in the space, from my opinion, and should help Circle, retain some of that market share from, and kind of keep people from switching over to Abra, switching over to Coinbase, and these other platforms that are continuing to innovate. Now for our bearish news, there is a former ringleader of a cybercrime syndicate of Russian and Ukrainian hackers. He goes by the name of Denis K. But essentially, this guy did some serious work with stealing Bitcoin. He got over 15,000 Bitcoins heisted from 100 plus financial institutions. And the way that they did this, there's a network of they have a crime syndicate that they extend across over 40 countries, which is pretty wild. And again, what they do is these people would spam workers that are employed at banks with malware, and anyone that's unsuspecting and clicked on it, these hackers would instantly gain access to the banking systems, and then from there they would be able to withdraw funds. How they went about doing that, there were 3 main options outlined by, I believe it was, again, a European company, or what is it? Might be Europol, but again, a policing company within Europe, or a policing institution. They identified that these remote ATMs that were outside of the bank were programmed to disperse cash at these predetermined times, and an affiliate or somebody that's in the gang would go up, collect the money, and then just walk away like nothing happened. So they were doing this at these remote ATMs. And then also, criminals were able to, or the hackers were able to transfer money through e-payment networks that were set up at each of these banks, and then transfer it over to their accounts, withdraw, and then, again, use that to purchase Bitcoin, use that fiat to buy Bitcoin. And the final way, they would tamper with account balances so basically, let's say an account had $100, they would fudge the numbers by breaking into the database and saying that account suddenly had $50,000. So, and after that, a mule would be sent in to the actual location, to my understanding, and then they would be able to withdraw, let's say, $40,000 in cash, whether or not it's $40,000 or it could be $20, whoever. But the point is that they were able to take advantage of 3 different options to withdraw funds, and clearly it paid off. But clearly he's now behind bars, and again, it depends how well these companies are able to track these hackers and kind of topple them, because again, this is clearly evidence that there are these crime syndicates making money. This comes out to, I want to say, around $1 billion, which obviously is no small sum. So again, just thinking about why people don't like cryptocurrencies. This is why people don't like cryptocurrencies and digital assets, because a lot of money is being stolen from these organizations through these crime syndicates, and they're using them to go purchase cryptocurrencies. So again, it's not great, and making sure that these organizations are taken care of to kind of quell the minds of people that want to invest is going to be very important. Finally, wrapping up with education. Today, we looked at Nvidia and basically what they do in the space and just like a brief overview of the company. And on top of that, their top shareholders, because Susquehanna, they're a Wall Street firm. An analyst there changed their rating of Nvidia and also AMD because there's talks that Bitmain is coming out with these ASIC miners for Ethereum, which, if that's true, and sources have confirmed that Bitmain is going to be releasing these ASICs for Ethereum. I mean, there shouldn't be ASICs for Ethereum, I believe. They were supposed to be resistant just to make sure that there's not centralized competition. But the fact that Bitmain is producing these kind of puts some pressure on Nvidia and AMD, and that's why their forecast is going down. Nvidia was dropped, I believe. Their expected earnings per share, or their share price, was dropped, I believe, by 29% as a result of this new knowledge coming to the table about Bitmain. So again, just taking a look at what shareholders are going to be most impacted here. And they were founded in 1993 in Santa Clara, California, and their two segments are these graphical processing units that, again, they're less effective than ASIC miners. So that's why once these ASICs do hit the shelves, then Nvidia is kind of going to be struggling to retain the same market share that they did initially. And on top of that, Tegra is the second segment here, and this is a combination of GPUs and computer processing units, CPUs, which are weaker than GPUs. And again, I'm not entirely sure what is going on in this segment, but this is what Investopedia lined out for how they do business and how they kind of break down their revenues. And again, they have around 10,000 employees, netted just over $5 billion in revenue, I believe, for 2017. And looking at the top shareholders, there's three that we're talking about today. First is Jensen Huang, and again, apologies if I mispronunciate anything there, but Huang is the founder, president, and CEO of Nvidia, and brings to the table a pretty impressive resume of electrical engineering with Oregon State and Stanford. And then on top of that, Huang owns 1.56 million shares directly, which isn't really that large of a sum. It's about 0.6% of the total, but then owns a larger portion of shares, 20.7 million, through these other means. I believe perhaps a dividend lockup or something, but whatever it is, he owns in total about 4% of the company in shares. Moving forward, Ajay Puri. He joined Nvidia in 2005. He's an executive VP, worldwide field operations. Again, the education is very clear. These guys are very smart. These people are very smart. Puri has an MBA from Harvard, and then more electrical engineering from the California Institute of Technology. He has an MS from there, and just over 500,000 shares outstanding in the company, which again isn't that large of a sum, about 0.09% of the total shares. And then Colette Kress joined Nvidia in September 2013, another executive VP and also the CFO. And Kress comes from the University of Arizona with a BS in finance, and again received her MBA from the Southern Methodist University, and just over 300,000 shares outstanding. So again, if you're looking at a share price of, I believe it started out at $12.95 was the analyst's expectations, and that kind of got chopped down to just under $8. So again, Kress is set to lose about $1.5 million from the change in estimates, assuming that it's accurate. Ajay, about $2.5 million, and Huang, a pretty substantial amount. I mean, that could be upwards of $100 million. So again, I'm sure that's not really a huge concern. Like, these people are obviously very successful, but yeah, their equity does get chopped out by these forecasts. And if Bitmain does continue to, butt them out of the market, then that estimate could go down even further. Nvidia has been on a downtrend as of March 27th. They had a pretty serious drop off in their share prices. I believe it dropped about 18% as of market close yesterday. So again, just something to keep aware of, what's going on with the competition. And these mining companies are successful based off of the technology that they produce and the miners that they produce. So right now, Bitmain seems to have a pretty solid grasp on that. So again, we'll see how that goes. And again, that's it for today. As always, thanks for tuning in. Again, if you guys want to subscribe, check out our website, sign up for the Daily Bit. Again, we try to make everything interesting and engaging for you all. if this is going well, I think this was a little shorter than yesterday. Let us know, provide comments, share this with your friends who kind of want to have more of an interactive discussion about what's going on in the markets. We're going to try to bring on more people to have more unique and diverse conversations about just the space in general, larger events other than daily news. If you want to follow us on Twitter, LinkedIn, Medium, or Facebook, we're posting blogs on Medium, we're tweeting on Twitter, we're posting educational stuff on LinkedIn, and again, just community things on Facebook. Anything that's going to be relevant for you guys to help you become educated about the space, it's going to be there. So again, thanks a lot. We're going to wrap up for today and come back tomorrow with the Thursday newsletter, number 73. So again, that's all. And thanks again for watching. All right, see ya.